Welcome, investors. Jobs numbers released this morning shows that everything is fine. The economy's still hot. Recession's likely canceled. Everything's good. That's what you hear on TV, but is that really the case? Unfortunately, and likely not, because here's the deal with these types of numbers and data. They don't come down in a straight line. They don't go up in a straight line. You have ebbs and flows, all right? So, and I have the visual representations that I'm going to share with you so you can picture the same thing in your mind. So we'll go through it together. But before we do, if you find value from this video, be sure to like the video and subscribe to our channel so you can stay ahead of the curve with our weekly market videos. I'm your investment advisor, Jake Ackerman. Let's get into it. All right, so let's start with what happened this morning. U.S. non-farm payroll, which is private sector jobs, public sector, so government jobs. And just how it sounds, it excludes the farming sector. All right, so let's take a look. All right, so U.S. payroll, which is the non-farm payroll, rose 199,000 in November. Unemployment falls to 3.7%. Average hourly earnings, a key inflation indicator, increased by 0.4% for the month and 4% for a year. Let's take a deep dive into what's in this non-farm payroll. Healthcare, biggest growth sector, adding 77,000 jobs. It's flu season, folks. Other big gainers, including government, 49,000. Government's going to keep spending. Manufacturing, 28,000. The car companies stopped their strike, and then leisure and hospitality, 40,000. All right. Now let's take this. This is going to give you the visual representation. Monthly job creation in the U.S. Take a look. It's slowly trending down, but you have a big pop, slowly trending back down, big jump, slowly trending down, and again, so on and so forth. Again, here's percent change. If this is the average hourly earnings, continuing to trend down with periodic jumps in earnings. And then here's the CPI, the blue consumer price index for all urban consumers. The red is the same deal except minus food and energy. Same deal, folks. Trending down, periodic jump up, but the trend is down. So we have the average hourly earnings, we have new jobs being created, we have inflation, all trending down with these periodic spikes, little upticks for a month, maybe 2 months at most. But we're starting to see the trend in inflation, jobs. Things are slowing down. Things are continuing to slow down. I want to highlight again on this non-farm payroll because this one can be controlled a little bit because it's also going to be based on government jobs. So government can really spend. Government has the power to spend because they're going to be bringing in taxes. They can put their debt on a credit card, which is causing us inflation, and they don't really put it on a credit card. They just say we're going to pay this back later, some kind of bill or note that they're going to pay back in the future. Well, we're going to pay for it, realistically. So this data point, non-farm payroll, as we go into this election, the government doesn't want it to be negative, so they can put a lot of money into that, bring in more employees, have more expenses for the government, and that's one thing that we need to keep in mind. So where can we get some more clarity that might not be so manipulated? I guess you want to use that word. We'll use that word manipulated because the government really can do that. What can't they manipulate? That would be the private sector. Let's take a look at what ADP had to tell us earlier this week. Private payrolls increased by 103,000 in November, below expectations. So this is the private payroll. So private payrolls grew by 103,000 workers in November, below the downwardly revised 106 in October, and 120 was the estimate. So private payrolls have been being revised down. And when I say be revised down, here's a great example for that. We just had 103,000 private sector payroll jobs for the month of November. In December, when they released the same report, did they change it instead of 103 and now it's 95? So that would be revised down, vice versa, revised up as, there was more jobs than we originally estimated, or the numbers came up and they grew. So they can be revised, but we're seeing revisions coming down. We're seeing the trend again coming down. So just because we have 1 month uptick in non-farm payroll, not even the private sector, does not mean things are okay, unfortunately. So, but again, the trend is down. These things we need to pay attention to. So let's shift a quick gear and look at why I'm continuing to say this each week, and despite getting one good monthly number in non-farm payroll. We're seeing big businesses slow down. Last week we talked about CEOs selling stock. Now we're starting to see things in the earnings report. We're going to get some real clarity after we see this earnings report because of all the holiday spending. What's really going on in holiday spending? But we'll cover that in weeks to come. What is happening right now that's what we're anticipating is going to take place will actually take place. Take a quick look at these couple articles, all right? Starbucks loses $11 billion due to poor sales. So the poor sales are because people, and this is not a huge commodity, a high expense item, but it's a little more expensive. I can make coffee at home if I really need to. Wells Fargo CEO warns of severance costs of nearly $1 billion in fourth quarter layoffs. So we're starting to see these continuing to see these big corporations preparing for layoffs. I mean, a $1 billion in severance packages is a lot of employees are going to be laid off here in the first quarter of 2024. So they're preparing for these. I would expect to see more of these types of articles, more reports and news that these companies laying their employees off, unfortunately. So that's why the trend is down. The trend is negative for workers. The trend is negative for average hourly earnings, which is a pay increase for the employees. Next week, very important, we have Fed Chief Jerome Powell and the Fed FOMC committee press conference where they are likely not going to raise rates, but given today's report, might give them cover to remain this hawkish. And when I say hawkish, I mean this. They'll talk about how the economy is doing great and that they need to keep rates high for longer. And that maybe we'll do another rate cut, which likely isn't going to happen, but they don't want interest rates to come down and things to loosen up too fast. Unfortunately, they want to see things break. Stay with us. Expertise you deserve, experience you can count on.